Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the bit of a roller coaster action that we did have on the Bitcoin chart, where we did have that 4-hour bears, situation being in control. And after a couple 4-hour candles, the bullish cross did try to lift us up a bit, and now we're pretty much break even with where we were yesterday, taking the course that we discussed. You do see that the stocks, are having significant pullbacks generally across the board. So we are just on a high alert for some type of volatility in this market based upon, the follow up from the quadruple witching that we experienced at the end of last week, and which was still shuffling around a bit this Monday. The rest of this week should show us a clearer picture. Whenever there's that quadruple witching in the stock market, it's just so much money being thrown around that you really don't necessarily have a clean picture or idea of what's going on. So tomorrow will give us a little bit better idea. If we do just take a look at what I said in the last episode, just for some transparency and truth in advertising here. You have to remember that this is actually a bullish cross, and all of these EMAs are starting to spread bullishly. We're getting a little bit of a mangled kind of mess over here, so not 100% sure how this is going to play out. We could retap the lows and then make a second go of it. That would be perfectly in line with having been rejected in this kind of rectangular area. Okay, guys, so we were talking about how usually we have some type of a knockout, whenever there's a bullish cross, one of these kind of downward bullish crosses, it tends to push price action to the downside. And then we were also chasing this bearish divergence on the 4-hour, which did suggest that the 4-hour chart would likely take a dip. Here I have the support level down at 16,300. You can see my kind of purple box down here. And, of course, we could even go as far as tapping lower lows, but that would have been our first stop. And then, of course, I reminded you that it was actually a bullish cross that we were experiencing. And so even if we had that pullback, that there was a good chance that it could pull us back up. And so what do we see on the charts? We definitely saw that pullback, and we also are getting a bit of a pump now based upon the you know that bullish cross that we did experience. If I go ahead and just to throw on the CME chart, which is the professional exchanges, these are basically what stock traders use to trade on, as opposed to the 24/7 exchanges, which most crypto people use. Um, we can see just a clear formation that we have been breaking down from. We did have that rising wedge. Of course, we had a little bit of a janky cup and handle here that took us to a measured move to around 18,000, which we called over here on Alpha Commission based upon some of these formations and other things going on. We did hit that target, and then we broke back down into the rising wedge, which has a 70% chance of breaking down. And so it did just continue that breakdown of the pattern. And of course, we got that 4-hour bearish divergence yesterday, and that did just push us down to this support level, which I've actually had marked out here for a while, because this isn't really your typical support. This is a CME gap. You can see there's a little gap in the price action right over here, right? And usually what happens is that price comes back to test that area, and that CME gap ended up being used as support multiple times after it was put in, pardon me, resistance multiple times as it was put in. And then you can see it was used a little bit as support here, and again a little bit as support here. And so it's just interesting. Those CME gaps do tend to act as support and resistance on charts, and that could just be a coincidence with the rest of the price action. But what I found is that CME gaps do actually have that type of effect. And so we are seeing a nice bounce off of the professional exchange, off of that CME gap location. And, normally I would say that's not really a big deal, but, we did tap it almost perfectly on top of it here, and then almost perfectly at the bottom of it here. And so it really did hold on to that CME gap range, which is just quite interesting. I just find it interesting. Could just be the regular price action, but just interesting how that happens that way. If we go over to the 24/7 exchanges like Binance, Coinance, whatnot, Coinbase, then we can see that we did have a bit of a broader area of price action over here. We didn't really have the same exact formation, and we definitely don't have the CME gap because this is not a CME chart. Those gaps are formed when exchanges are closed for the weekend or for nights or for holidays. And so, because the 24/7 exchanges, they're always open continuously, they have way more candles put in. And so that bearish divergence was really on the 24/7 exchanges. So the 24/7 exchanges is what was driving us down. And if we took a look at the CME chart, which we don't have to flip over there. You can just take my word for it. We actually had a fairly bullish setup on the professional exchanges. So it's just weird that we had this little conflict between the 24/7 exchanges and then the CME exchanges. Where the CME exchange really had price action that would suggest a bounce, and then the 24-hour exchanges really had price action that would suggest a pullback, and they sort of met in the middle. You got the pullback. It didn't drop to the bottom of this formation that we're putting in here. It's kind of like a falling wedge formation that we seem to be generating. Not 100% confirmed yet, but this does seem to be putting in something quite interesting here that I am going to follow. Why do I want to follow that? Because falling wedges have a 70% chance of breaking to the upside. So if we do get an upside break out of this falling wedge, it's going to be quite exciting for the market, I think, assuming that there's enough energy in the system. But of course, we're going to have to get in this area first, and that may entail some sideways action, maybe some pumping, maybe some dumping, maybe some chopping around, maybe even a fake out to the downside, sort of like we got a fake out to the upside on the CME chart and then we pop down. Maybe we're going to get a fake out to the downside and then we pop up off of this wedge. So guys, price action often has a lot of shenanigans, and our job is just to try to navigate through that. Of course, we're not fortune tellers, so nobody can know exactly how it's going to go. We can only take it one trade at a time. And yesterday, the obvious trade was this drop. Okay, so we got a significant drop here. And if I go ahead and put on the markups that we did have on the chart yesterday, you can see what I've added here is this head and shoulders, because during that time we actually filled out this price action right here. And I was getting a little bit worried that that drop wasn't going to play out because, I made a video. I was mentioning to you guys that it's likely that we're going to have this bearish divergence based upon these candles, which would drive price lower. And just lo and behold, we did end up having a very significant drop, which just killed a lot of altcoins. Okay, but you do see that we put a couple 4-hour candles to the upside almost right after I released the video, and so I was just worried. Oh man, like what if this thing just turns around on us and we don't get the drop? Did I guide people the wrong way? Well, nope. It looks like we're still killing it over here at the Alpha Commission. The call played out. We absolutely knocked it out of the ballpark, and we got the drop that we were looking for. We did tap into this liquidity over here, and you can see that I do have the purple box. That's the CME gap, marked up on the 24/7 exchanges. Even though there's no gap, I have it marked up. The reason why I have it marked up is because those CME gaps often are a very interesting place where price does some kind of strange stuff that you wouldn't really expect from just a hole in the chart. And look at, lo and behold, even on the 24/7 exchange, we bounced right off of that CME gap. Now, that also goes along with this support and resistance. If I zoom out, you can see these kind of like teal boxes that I have running through here are like major support and resistances, right? So you can see we get a lot of support in this teal box. We got a little support in this teal box. And then if we fall down into this area, we would have probably support down there. Now, this little area that I had marked over here, this would be kind of temporary support based upon our momentum, okay? And based upon this formation, the bottom line here. And then these two blue lines are based upon momentum. So, doing a momentum calculation, if we drop down into this area, that's what would give us the chance to bounce off of this diagonal yellow line. But strictly speaking, just based upon support and resistance and, buyers and sellers, on the books, we would expect the horizontal lines to provide us the best guidance. And these diagonals, sometimes they don't work out, right? Like patterns can fail. But we really were looking to try to get above that key level of 16,745 yesterday. Now, we do have to update these numbers because, of course, they're only good for about 1 day, maybe 2 days. They kind of stretch it out sometimes. But you can see that we did get heavily rejected off of that line that I suggested. We have no 4-hour candles that closed above there. Even though we do have several wicks, no 4-hour candles closed up above those lines. And whenever I have a very significant line that I actually take the time to mark out here, I want to see one or two, preferably at least two 4-hour candles closing above that line or below that line to confirm, if it's not accepted or if it is accepted, depending which way we're kind of trending there. And of course, we really did pump off after I made that last video, but we never got a 4-hour candle above my line. And so that did suggest that divergence was going to play out, and indeed it did. Then, of course, I can't just to be holding people's hands over here. Price action just moves too fast. Once we started to get a little bit support in this area, you could see that we had pretty much a nice buy wick off of this 4-hour candle. Just price action came all the way down here. It got pushed back up. And then we had an engulfing. You can see this blue candle is just bigger than this red candle. We had an engulfing candle, which did suggest that some bullishness was coming back to the chart for whatever reason. Basically, the quadruple witching is over now, and so maybe the chart just wants to regulate itself. And so we can see that, we do have that 4-hour candle forming here, which will be above that critical line that I laid out yesterday, just kind of teasing us with the potential to continue to the upside. Yet look at where it wicked to twice, right? And then we also have these wicks over here that attempted to. They still haven't broken my green momentum level over here. Is a different type of momentum that I'm measuring. And so we never did get above that 16,870. Even today, even as we've pumped, we're still finding significant resistance on these key levels that I have had marked out now for multiple days. Okay, so guys, again, the Alpha Fam is just killing it. We set these levels out. We've been very disciplined. We understood that there was the potential for bearishness, so we didn't just go all in or do something crazy like that. We had some patience, and now we're seeing after the quadruple witching how price action might end up playing out. And while we could have a double fake out, down fake, and then up fake, again, like we just don't have a couple candles over here yet. We don't have a couple candles over here, and so those past calls, we really do have to just kind of reset. The key level that I wanted to see us get above was this 17,300. This level still is in play. That is a critical pivot that basically will recapture this kind of just really kind of really local small time frame capitulation candle that just drove us down pretty heavily. We could try to reclaim that candle, and then if we're not able to get over 17,300, I'm still going to be biased to the downside. So Again, like we can get interplay in this area, but just remember my line of 17,300. It is going to be significant. Again, guys, these are levels that I set, a couple episodes ago and discussed last episode as well. So let's just move on from those. Let's throw on some new lines here. And I do have an update. So as you can see that although that bearish divergence did play out, right, that kind of red line that I had here, right, based upon the price action, we do now have a bullish divergence that is in play. And so this bullish divergence is what, was generated when we just kind of dropped so quickly down to support. We generated this bullish divergence, and that's measured in various ways. There's multiple different indicators you can use to figure out divergences. You can just look that up in the indicators list on TradingView, and you can find all sorts of indicators that help you identify divergences. But you can also do a Google search and learn how to figure it out yourself with an RSI indicator and the price action, and then it will become like second nature to you to identify those. And so we can't see this bullish divergence. It did play out before I had a chance to make a new episode, catching everyone by surprise, just kind of shaking out the shorts, right? People probably started shorting a little bit too heavily, and then the market wanted to take profit by just liquidating them, right? Just destroying the bears. And guys, so if we do take a look at these lines that I marked out here, it's kind of a little complicated area that we're in. So I did try to just get a little bit of nuance. You can see that the key pivot that I have here is still there, that 17,300. I'm not going to flip bullish spice unless we get above 17,300. Interestingly, our momentum is suggesting that 17,265 is a critical level that we should get above. So, from some of these kind of like a daily and a higher time frames, we really should be getting above 17,265, with also kind of a significant one up here around 18,085, and there's multiple different pivot points up here for momentum that are suggesting 18,000 to 18,085 is a significant area. So if we do want to reverse this chart, just based upon a momentum basis, just totally ignoring, the price action and whatever other indicators, we would want to capture eventually over the course of the week or whatever, through the holidays, we would want to recapture 18,085 solidly in order to overcome these candles. And you can just see it in the price action, right? But what may not be more obvious is that we're not going to be biased in that direction unless we get over 17,300, and then our momentum is saying 17,265. So that's some confirmation that this really is. Basically, I've added confirmation to this area, okay? And then I've also suggested that even though we have a bullish divergence here, we could be limited if we don't really clearly capture this area. Then there could be a chance for another hard rejection or even a hard rejection at the middle of the chart here, right? Based upon these numbers that I just described to you. Um, what's going to be a little bit trickier is navigating what we have below that, because these are really the levels that we need to pivot on in order to have those kind of like medium time frames, be bullish. But in terms of the shorter time frames, we do have our momentum all the way down here to a 15,100, and so if we do drop, it's not like it's going to be the end of the world. We're probably going to find some support down there. So our momentum, of last resort is kind of hanging out in that $15,100 area, which again, that is very confluent with this pattern that I've identified that we seem to be putting in of this kind of huge falling wedge. And so probably we're going to catch ourselves at the bottom there. In other words, if we do start breaking down, some people might tell you that we're going to go straight to 14,000. It's not necessarily true. We may just end up catching ourselves at 15,000 and Now, the support and resistance doesn't really suggest that. There's nothing really particularly strong there, but people that's why people are going to say 14,000, 13,000. But I'm telling you that if we end up getting a little bit of a bounce, especially if we're above 15,100 alpha fam, okay? Like 15,150. Let's just do 15,150. There's actually two pieces of momentum down there. So I'll just use the conservative one. If we're above 15,150, I think we can safely say we're probably not breaking down to 14,000 or 13,000 just yet. Okay, so just understand that we can catch ourselves potentially in this area, and that's just a little bit of a heads up. People who don't see this formation, okay, and people who don't know how to measure momentum, they're going to think that we're just going to drop down to 14,000 and 13,000. Just, if we fall down, that we're just going to go straight there. Some people may even be saying, like, see you at 9,000 or whatnot, this kind of thing. And yeah, that's possible. If stocks really do just kind of have a massive dump on the stock market, or if the dollar just, spikes up or something like that, the VIX just spikes up, these things that work against trading, then of course there's the possibility that we could just cut through this pattern. But of course, I am just letting you know that, if it's just regular days and nothing too scary is going on in any other market, right? There's no like weird bad news and we're just dumping because we've been dumping for a year, then probably, we could get a little bit of a hang up in that 15,500 and a $15,000 area, okay? And anything above 15,150, I'm not too worried about us just dumping to hell all of a sudden. We have a chance to catch ourselves there, okay? And just a little bit of a heads up for you guys. Let's go ahead and just move in on the price action that we're kind of facing with over the last couple hours. So these are 4-hour candles, and so this is pretty fresh here that we got this massive pump, relatively speaking, to the last couple days where we're just moving like in tiny baby steps. We just dumped really hard and then we just pumped really hard. So a little bit unexpected, but hey, that's the quadruple witching for you. And what we can see here is that on a, essentially on a 12-hour basis, then we really are going to want to get to stay above $16,440, and based upon a daily basis, we're going to want to stay above this 16,825. Okay, so we are going to be looking a lot more bullish if we are able to stay above 16,825. Now I have a couple sets of lines here because I am trying to navigate between these 12 hours and also the daily and then also the 2-day. Now it's interesting because the 2-day chart, the number 2 days, right? 2 days, not today, closes at the same time as the daily candle in the next closure. So what that means is that we do have to consider that the 2-day may have a little bit more of a strength than the 1-day chart. And so we should look to respect the 2 days levels, not just the 1-day level. While we could buy a little bit of extra time with the 1-day levels, uh, just to be more secure in our assessment, we should also gather the 2-day. And the 2-day is saying that we do need to hold these levels of 16,745 critically, and preferably that we grab 16,775, to be much more confident. We are currently above those levels, and so that is looking pretty good for us. And if we are able to capture 16,875, it's going to look just that much better for these kind of daily concerns. And the 12-hour, of course, is in the same region essentially. But well, you can see this is the bottom of the candle down here. So I think it's just common sense. If we lost that area, we're probably going to continue lower. So this one probably isn't the most significant measurement. You probably really are looking at this area. And so I'll just say that critically speaking, we should hold above 16,775 for the 2-day chart to be panning out. And if you want a little bit quicker bullishness, then the 16,875 would be a level where we really are potentially likely to pump. Okay, so there's just a couple different momentum lines in here that making it a little bit complicated to look at as we're pulling back here. And we just don't want to be losing 16,745 because we may come back and test this area at 16,440. And I don't know, that could be, I guess, like a double bottom kind of scenario, right? Something like that. But and if people are looking at the wicks, they could call that a higher low. So it is possible that we just do something like this, and just kind of work our way through this stuff, right? If we are going to have some bullishness, but to have a more clear picture, I'd prefer to hold above these levels. And what I'm saying is that that's probably a shorting opportunity below the 16,745, and then I would be a little bit wary around 16,440. But in general, these charts are looking fairly okay because of this bullish divergence is playing out. And we also did get that bullish cross on the daily with the 50 EMAs that I was talking about when we were in the last episode. And so you can see that we did put in a little bit more of a bullish cross right here. And yes, the crossover did have us dump, right? You can see this bearish candle right when it crossed over. But because it was a bullish cross, it did end up just pulling us back up. And it did so quicker than I expected. But, again, like in the truth in advertising section, we did discuss that possibility. Not really sure what else I could add here, except that if we do jump over to the 2-day, chart, then we could potentially take a look at how our volatility is doing. Volatility is, it's on the floor. It did kind of max out here, but it's just meandering. Can't really get a clean picture off of that. Let's look at the daily. The daily is looking much better. It does suggest that we are expanding ever since the 12th. But unfortunately, we were expanding to the downside since the 12th. So the daily does suggest that there's going to be a continuation of a push to the downside. And if we do look at our EMAs, you can see that, we did just tag the 9 EMA there. So that's usually not the most bullish thing. If we can't get above the 9, I wouldn't say that we're rejected yet because this is an engulfing candle, but there may be a little bit more work to do before we get into any type of a bullish place. So again, I just don't have a clear picture on this. As long as we're in this kind of green area up here, I'm going to have to, lean kind of short-term bullish, on these shorter time frames, going to have to lean that direction. But if we lose those critical levels that I was mentioning, then of course, we price action may want to dip down and just kind of hammer out this area a little bit if it is going to go bullish. And if we do lose this area, then I'm not necessarily sure that this is going to hold the second time. And so we should expect that there's the possibility to drop all the way down to 15,000. So you guys do have to have your game plan ready here. If we do look over at the 12-hour, let's see if there's any more bullishness. Nope, we were rejected from the 9 quite clearly on the 12-hour candle. We do have 4 hours left to go on that, so it is possible that we get reaccepted by tomorrow morning. But right now it looks like it's pushing down. It doesn't look bad, to be honest. It's being suppressed basically by the 10 simple moving average, and that does have a good chance of pushing through there. So tomorrow morning we can really take a clear assessment. Are we closer to that 16,875 level? Are we at least over 16,825? If we can do that, I'm going to be getting a little bit excited about potentially some bullishness to this $17,300 area. But for right now, we are getting a little bit more of a pushback from the chart. So there is a little bit more work to do there. On the 4 hour, you can see that we were accepted above the 9, whereas previously we were just rejected, 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 right? So then we had this really hard rejection right here. But the chart just came back with a vengeance. I mean, I don't know who bought or whatever, but somebody bought a lot of Bitcoin, and it just pumped up and got accepted by the 9. So we do have this kind of bullish squeeze play here. You can see that the 20 is a bit flat, and the 9 is pointed upward. We have been accepted by the 20 simple moving average as well, and so we have both the 9 EMA and the 20 simple moving average while we're trying to push through the 20 EMA, which does suggest we do have a fairly decent shot at getting up to 17,000 at least. Okay, so 17,000 could be an interesting area, and if we are able to put in, several candles up there, 4-hour candles, or close the day above that area, that would meet the threshold that I would need to see us moving up into this $17,300 area, where unfortunately on the 4 hour we do have the 200 EMA overhead, which could end up rejecting us and just beating us back down on this chart, perhaps to even further lows. Okay, so we do have to be aware of that it's not just a given that we can pump through this middle. We could just be reclaiming this kind of naked candle over here, grabbing some of this liquidity, and then working our way back down. Okay, but again, if we do get above 17,300, you can see it's a pretty good chance that we could just pump up here. There's nothing limiting us on the 4 hour. Let's look at the 12 hour. The 12 hour, we do have the 89 EMA in that 17,300 area. So let's say that we do get accepted by the 12 hour, and that's not a given yet, okay? Like I said, we have more work to do on the 12 hour. But, with the 4 hour looking fairly bullish, there's a good chance that we could get accepted into this area based upon the 4 hour. That could lead to the 12 hour to getting a little bit bullish. And, this isn't the most excited EMA structure right here. But could it be good enough to get us up to this 17,300? Probably. It's just that the 89 is a good place that charts like to get rejected from. So, again, like that could be working against us on the middle of this chart. On the 12 hour, you do see we also have that liquidity up there. Let's go ahead and look at the daily to see what our EMA structure looks like. Yeah, I mean that 17,300 is where we have that bullish crossing of the 50s, and so I don't know. It could, there could be a chance here that on the daily maybe we get rejected again. Up here at that $18,000 area, you see the 89 on the daily is all the way up here. And given that that's a bullish cross, if we do get our price action in this area, the daily is actually going to have a squeeze also. So, we could get a little bit of a run out of this, maybe even capture that liquidity up here. That's pretty obvious. And, you know, I don't know. We're gonna have to take it from there because we're getting a little bit of ahead of ourselves. But I am just trying to talk through this chart. I think we covered most of the bases there. We have EMAs, we have volatility, we have momentum, and then of course we looked at our patterns and price action as well as reviewing, what happened with this last call, which was actually quite good, but then randomly the chart did a reversal, right? And you can see when that happens, when you get these kind of reversals, sometimes you can go on a nice run. So we do have to watch this for potential bullishness. A lot of people are going to be being perma bears right now. And, there is, I'm not going to lie, there's a good chance that we could get knocked down to this $15,000 level, but maybe the chart wants to do a little bit of a run before that. And again, if we get over that $18,000 area, essentially we're going to be reaccepted back into, you can see these past candles, we're going to be reaccepted into an area that we've pumped off of before. You can see just pump, right? We just pumped all the way up to 21,000, based upon being accepted at 18,000, 18,500. So if we do get above that area, again, like there's the possibility that we just do that again and get up to that $20,000 area. And then we're talking about really changing our situation, okay? The higher time frames are going to be affected bullishly by that. But you see what I see, which is that on the 4 hour, we are going to have to fight that battle around that 16,800 and at least 25, preferably 75 level. 16,825 is a great sign. And then I'd like to see us above 17,300, as I've been saying for several days. And then 18,000 is really a stretch goal, and that would be quite amazing if we were able to do that. And overall, that's in the context of this falling wedge where we're just literally in the middle of the pattern. And so, we could either just retest the top, because you see we kind of bounced off of this box here, right? That we broke down from the box and we retested the box, but we didn't retest the triangle. And so if we did just kind of work our way up and retest the triangle and then came down and then kind of bounced off that $15,000 area and maybe broke out, or broke down, who knows, right? That could also make sense. We don't have to just go straight down. We can go up, retest the top of the wedge, and then break down. Um, Whereas the entire market probably just thinks that we're going to dump straight down, and so there's probably just a lot of shorts. So there's money to be made by these exchanges and market makers going against the people who are shorting, right? Just wanted to talk through that. Guys, I'm going to close off this episode, just rambling a bit here. I am overtired. Sorry about that. It is the holiday season. I hope you're enjoying your family, and also just the kind of merriment and that kind of thing. Guys, again, like this is your alpha for the day. Stay safe and happy trading.